स्टार्ट किया उतना इफेक्ट आने वाला है. बट इक्विटी मैंने 60 का 30 कर दिया या 20 कर दिया, then it will make a big difference by timing it correctly. So this is one engine. Second engine is stock selection. So whatever stocks we select and commodities we select will be again based on a certain mathematical model. Now let me show you हम लोग का allocation last 20 years का क्या रहा. का data is 60% equity, 20-25% fixed income, around 10-15% gold or silver. Correct? Now I'll show you our data. Based on our model in the last 20 years, this is our equity allocation, the green bar. The yellow is commodity exposure, and this is fixed income. Look at the average numbers on top. Average equity exposure of 30%. 28.5, let's take it as 30%. That's how much of existing funds? Half. Existing funds में 60 है, उसका ये आधा है. Half exposure in equities compared to existing funds that are there. Fixed income 45-46%, almost double of existing funds. Existing funds में 20-25 सारा number what you saw 45 है. And commodity में जहाँ पे 10-15 था, in our case 26%, almost double of existing funds.
What's your standard deviation?
Very good question, sir. So now let me show you that.
So once
We will send you the presentation.
Certain ratio as well.
Yes. I'll show you that data now. So let's look at this data. So let me explain this. Okay. So we will look at the first column only. First, what is this column? Static allocation. Here we have assumed in the last 20 years, if you had put 60 rupees out of 100 rupees in Nifty 50, 25 rupees in short-term index, matlab debt, and 15 rupees in gold, then if you had done that, then in the last 20 years, your portfolio would have generated 9.5% CAGR with a standard deviation of 12.5% per annum, with a maximum drawdown or maximum loss of 40%, which means 100 would have become how much? 60 rupees in the worst case scenario. Okay, now let's look at Nifty. We all do equity funds now. Let's look at Nifty. Same period, Nifty has generated around 11.5% with a volatility of 20% per annum. Volatility is nothing but measure of risk, with the highest drawdown of 60%, which means 100 in the worst scenario would have become 40 rupees. Okay. Now let's come to the second column.